And good afternoon, and welcome to the February 2022 Executive Committee meeting of the Board of Education Retirement System. It is Tuesday, February 8th, and the time is 1:03 p.m. As a reminder, please note that the committee meeting is being recorded and will be posted to the BERS YouTube channel. Start by calling the roll. Deb Dillingham.
Here.
All right. John Matterich.
I'm here.
All right. Russell Buckley.
On behalf of New York State Schools Chancellor David Banks and DOE Chief Financial Officer Lindsay Oates, I am here.
We have a quorum. So the first item on the agenda is to consider the minutes from the December Executive Committee meeting, December 2021 Executive Committee meeting, a summary of which was included in your packets. Can I get a motion to approve the minutes?
So moved, Russ.
Thank you, Russ. Can I get a second?
Second from John.
Thank you, John. Any discussion? All right. All those in favor?
Just want to confirm we're good with quorum of 3, right?
Yes. Oh, as long as there's one labor member.
Got it.
Yep. With the change to 5. Right. Go back in. Any discussion? All those in favor, please say aye.
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 All right. Any opposed? Any abstentions? All right, the motion carries. Perfect.
And Antonio,
Yes,
I
Deb.
abstain, but is it right that you can approve if you weren't there? What's the?
Oh, no, you can. That's fine to abstain.
Yeah, okay, so so the short answer, Deb, is yes. There's nothing stopping you from doing so. If you want to discuss it, we can have a really short attorney-client. But the short answer would be that it is acceptable to approve if you haven't, even if you didn't attend.
Okay, well, I'm going to abstain unless the vote is needed.
We approved with Russ and John. Thank you.
Okay.
So before we begin the public session presentations, I would like to remind the committee that this is the first committee meeting after the board amended the executive committee's responsibilities. This committee now has the ability to approve investment recommendations up to a certain dollar limit. And honestly, that came just in the nick of time because 3 of the 4 investments you're here today in executive session have February 28th deadlines that come with substantial fee savings if BERS chooses to participate. So getting these changes done as we're going through the transition was critically important for us to continue the business of BERS. The second item I would like to note for the record, even though this executive committee cannot take action on it, is to note that the Comptroller's Office has proposed to the state legislature a change to the investment provision, which we colloquially call the basket clause, which currently allows up to 25% of our investment portfolio to be invested in assets that are not part of the state's enumerated list. And the kind of the legislation would take one of 2 avenues. The first is to increase the international allocation, so the part of our international portfolio that would be exempt from it being included in the 25% basket from 10% to 30%. Or the alternative is to increase the basket clause limit to 35%. Again, this committee cannot take action on this particular resolution, and the Comptroller's Office is asking all the systems to approve a resolution that would show our support for their legislation. As soon as the full board is appointed, we will bring that to the full board for their approval. We have Allison Hirsch from the Comptroller's Office on the line now, and I don't know, Allison, if you want to have any words about this particular legislative change.
Sure. Thanks, Antonio, and thanks everybody for inviting me to be on the call today, though I'm not a board member or trustee of BERS. I really appreciate you including me and inviting me, and it's nice to virtually meet many of you who I have not had the chance to meet. So, basket clause. So state law, a law that passed in 1960 basically dictates how we can diversify our asset allocation within the investment portfolio and limits the amount of alternative investments we can make, both in foreign equities and in things like private equity, infrastructure, etc. And so we are, as far as I understand, we are the only state in the country that has that legislative limitation. And what we are trying to do is not get rid of it because it's, you know, an understandable stopgap to protect pension folks who are getting pensions and taxpayers and other taxpayers. But we want to expand it because basically it has not been changed the basket clause has not been changed since 2006, I think, and foreign equities has not been changed since 1993. So what we are asking is for more flexibility within the basket and trying to get it into the state budget. And we've given there's sort of two ways to expand our ability to diversify. The first is just to, right now we are allowed to put 25% of our investments into what are considered basket allocations. We are asking to expand that to 35% as one option. And the other option, we're not asking to do both things, it's sort of an or. Right now, we are allowed to put 10% of our investments into foreign equities, and anything above that counts against the basket clause. And so the other way to deal with this is to basically expand what we're allowed to put in foreign equities from 10% of the assets to 30%. And so we've sent this to the governor's office and said, we are happy with either of those two options. There's legislation has passed in Albany for each of those over the past 10 years that the governor's vetoed at various points or has gone only in one house because people have. So that is what we're doing.
Any questions for Allison?
I just have a question. You know, the span from 25 to 30 seems, you know, reasonable, and not that big of a change, but to go from 10 to 30%, what was the reasoning behind that? Because that's a pretty big percentage of change.
So right now, and I have to check the exact numbers, right now I think about 18 or 19% of our assets are in foreign equities. So what that means is we've already gone above the 10% cap, but that additional 8 or 9% counts against the rest of the basket clause. And so what going from 10% to 30% does is it takes the 8 or 9% that we're already investing above the 10% out of the basket allocation and puts it into foreign equities and gives us some more additional space into foreign equities so that there is an additional pressure on the basket. I would also say that all of these are really negotiating points, right? I don't know that we expect in Albany when we say 10 to 30, if any of you, I know many of you from labor and government have interacted with Albany before, and generally, you know, you say X and they say Y on purpose by no matter. So I think it's also it's a place to start the conversation.
And Antonio, I'd just like to add that the controller and representatives from BAM came to the executive team on this question a few weeks ago. And what I suggested to them was that we had a couple of challenges around this question. One, we didn't have trustees to approve them. Two, I didn't expect to have sufficiently informed trustees in the next or the first few meetings of our new board to fully understand this question. And then the complication around the issues related to how our returns are leveraged by the TDA complicates that even further. So the practical just so you understand, trustees understand, I've already informed BAM and the controller's office that it's unlikely they would see support from BERS before April or May. Just because practically speaking, I would never propose something like this to a brand new board who is largely uninformed on the question.
Yeah, and I Sandy, I really appreciate that because I want to say we wanted to come today, and I think, you know, Antonio, Sandy, Daniel, everyone invited us to come so that you all know what's going on. We are not expecting you all to vote or support. We just, you know, we are doing this on behalf of all 5 of the systems though, and didn't want to be in Albany lobbying and advocating something that you all don't know about. And so, you know, we do have resolutions that, because, you know, the boards are constituted differently, so it's a different process, but NYCBERS, teachers, fire have all passed resolutions, and it's going before police, I believe, next week. So we are moving with the other systems, understanding that it's a much different structure and approach here.
Absolutely. And I think, thank you, Allison. I think the final thing for us is that certainly, should this pass with or without kind of a formal resolution from BERS, it would constitute more work around, I imagine it would almost certainly trigger a new asset allocation as soon as as it passes and gets signed. And so from that perspective, while this executive committee cannot necessarily act on a resolution for this, they can kind of help guide the asset allocation process. And our consultants, BAM, and kind of your staff will be right on that. Should it, if and when any changes to the basket clause pass for a new asset allocation.
Yeah, and I think that's a really good point. And I just want to say there's nothing in this proposal that changes how investment decisions are made or asset allocation decisions are made. So if this were to pass and there needed to be a new asset allocation, there would be a process with the boards to discuss that, to understand it, to vote on something. It doesn't change that process or change the dynamics there.
Antonio, can I just add into
Absolutely.
that from pure investment consulting, not considering any of the other technical issues or administrative issues to get it through a new board, from an investment consulting position, a greater allocation to international and these changes. We at BERS in the past, we've looked at this and supported this from an investment asset allocation point of view. We know that we struggled to keep up with the global market capitalization, the weighting between U.S. stocks and non-U.S. stocks because some of the limits. So I want the trustees to at least know that this is not an off-the-wall kind of recommendation at all. It's something that as from an investment asset allocation study we've argued for before in the past.
Well, thank you, Mike, and again, thank you, Allison, for kind of giving some color to the legislative proposal. We look forward to further updates, and again, if and when kind of things move through, or we get a full constituted board that's ready to vote on it, we will make sure to keep you posted.
Hey, if I could quickly jump in as a trustee to ask a question. I was wondering, Allison, if you've worked with the state at all on this proposal. I'm not sure if the basket clause applies to the state systems as well.
It does.
It sounds like it does. And I guess, the three board members that you're speaking with today, the trustees, have all been on this board for almost half a decade, if not longer. And certainly a good portion of the board I expect to remain intact. I guess I'm just wondering if there's any paper on this proposal. I'd be happy to review it. I don't think I've received anything.
Absolutely. We'll forward that
So
to
that
you.
would be great. And, to the extent that we are able to rely on the prior board members' expertise to potentially support a resolution as well as our investment advisors, that's certainly not out of the question. And wish you the best of luck in Albany. I know that Albany is a great place to be.
So let me, so two things I think. Sandy and Antonio and Daniel, I think you have the memo that we sent to the governor's office.
Yes, just forwarded.
Great. So we can circulate that. As far as the state systems, all public pension systems in the state are under the same state legislative law, the retirement law, and subject to the basket clause. Comptroller DiNapoli is supportive of changing the basket clause. It's something that he's been supportive of for a while, has not wanted to lead on, but is happy to support. The state teachers are also supportive as the other large funds. So it is something that right now, I think within the public pension system, we are really leading on, but the other funds in the state agree with our analysis and support.
Glad to hear it. Thank you. Sounds like you're getting up to speed very quickly at the comptroller's office, Allison.
Thank you. All right. So with those two items, let's go to the first portion of public discussion, which is preliminary performance. And so please let me know when you can see my screen. We good to go?
Yep.
Absolutely. And so this is for the second quarter of the fiscal year 2022. As a reminder, we use multiple benchmarks for looking at performance. The first is what we call the reference portfolio, 70% US equity, 30% US bonds. And that is kind of think about it as the cheapest and least kind of complex portfolio for the level of risk we want to take. The global reference portfolio is 70% global equity, so using the global market cap, as Mike discussed. and then 30% US bonds, since we typically do not like to use basket space for and do not invest in international fixed income in the same way. And then finally, the policy PME benchmark. And so we use the public market equivalent as a benchmark for our private markets. This is one of the months where it's really kind of difficult to, that things have moved so fast that this slide right here is almost, is completely out of date. This is through December. Usually this is a weird month because the second Tuesday falls on, early in the month. We weren't able to process the latest holdings from State Street, but this can give you an idea how much things can change. At at calendar year end, BERS was $9.13 billion between the QPP and the fixed TDA. Our total portfolio preliminary return 4.72% for the fiscal year, versus 6.45% for a US only portfolio. And then again, that policy benchmark around 4.11%. Through the years, this has kind of been a theme, US versus everything else. So generally what you're going to see is our performance is better than the policy benchmarks, except for the trailing 3 years, which is where it's behind by about 13 basis points, but beating the global benchmark because we are actually overweighted to the US, and beating the policy benchmark a lot of times because our private assets have done better. But and for all of this, Mike, I would like to have your commentary, especially on this next slide, because of kind of what's happened since December. If you follow the markets at all, the last, certainly January was an incredibly rocky ride on the low end, particularly in tech stocks. We've seen a decline in almost all of the kind of the public asset classes. So we wanted to show you this. This is the benchmark returns. So for each of our public asset classes, the benchmark return as of yesterday. And you see for the fiscal year, there are only 2 asset classes that have had a positive return: US equity at 2.05%. and US TIPS, so Treasury inflation protected securities at 32 basis points. That last line there is how the reference portfolio has done. So you see every other major asset class that we invest in the public markets has had a negative return, which if you look at the reference portfolio as of 2/7/2022, it is 63 basis points. So if we go back to the last slide, the reference portfolio for the fiscal year at the end of December, so a little bit more than a month ago, was at 6.45%. So that gives you that tells you what January looked like. And so, but understandably, we always kind of thought we would have some give back after the fantastic returns. Didn't necessarily know how it would look. But if you look at the trailing 1 year to the trailing 10-year annualized, you really see, again, it's been a story of U.S. equity. It's continued to be a story of U.S. equity. Even in kind of this downturn, U.S. equity has still mostly outperformed the other major equity indices. And again, just from the highs of the last several years that have gotten us to over 100% funded, there was going to be kind of some rocky road. And Mike and Vanessa and Christian would love to have any of your commentary that you have on the particularly the performance through January, and also kind of what you're talking to your clients about, given we've kind of been up into the up into the left forever, obviously up into the right forever. So now being
Right. Yeah.
the first time we've experienced this in a long time.
Yeah, I think each of us have a little bit of perspective we'd like to put out, but just while you have this slide up, this is one of those times when from consultants and money managers, you'll hear we're long-term investors and we don't really get whipped around by in terms of either the key things that we came out of our ALM study, our funded percentage. Kind of remember that our plan actuary does smooth these investment results. So that long-term perspective, and I'm not even talking, even looking at 3 and 5 year is kind of the return perspective. Then the second I'll give you from the asset allocation point of view, and this is to Antonio's point. Remember when we did our last asset allocation review, our expected returns over the long term for stocks were, depending on US, non-US, between 7 and 8%. And so here, when you see these trailing 1 year and 10-year numbers at 14, well, I don't want to say that we're not market timers. We didn't expect that the market was going to take the kind of hits either it did in March 2020 or the kind of January hit that Antonio just talked about. But indeed, we have been ahead in terms of U.S. equities. You can see on that right-hand column, a little below in terms of what non-U.S. equities would do. And then in terms of fixed income, that number after the losses as interest rates rose was still bringing down what was a return for our U.S. core bond portfolio that was above expectations. So what we're telling clients is keep your focus on that long-term asset allocation perspective. Yes, we believe what the Fed said, and we think interest rates are going to rise. We'll talk a little bit about that more when we talk about managers. But the BERS overall portfolio, the kind of things we're looking at are really short-term in our view.
Thank you, Mike.
I think
look, any-
Christian or Vanessa have,
Yeah.
I mean, I know Christian looked at some of the returns
Absolutely.
down to the manager level.
Absolutely. So
Yeah, I guess I can make a few comments just about the markets themselves. And apologies that my camera's not functioning right now. I think in addition to Antonio, to what you mentioned, that it's been sort of a give back period this year relative to the great gains of last year. It's also that the sorts of things that worked last year aren't really working so far. So think mega cap growth stocks, more speculative technology, things that stocks of companies that aren't really generating, income at this point. They're still very speculative in nature. And those are the sorts of things that have been especially beat up. And then you've got value stocks, which tend to trade at lower multiples to growth stocks. Those are outperforming growth stocks by about 10% so far this year. And then Antonio also mentioned just geographically that even with what's happened this year, the U.S. has still greatly exceeded international and the emerging markets. But really, if you look at the last month plus, it's been EM that has been sort of the most defensive. So a lot of what happened last year has been turned on its head. And then some of those havens from last year, I think high yield and tips that really worked well, returned 4 to 5%. So far this year, they're not protecting as well. They're both pretty deep in the red. So it's a lot more volatility. And as you mentioned, that's not totally unexpected, just given where we're coming from, but certainly a lot of churn underneath sort of the headline numbers that we see.
Thank you, Christian. And Vanessa, anything to add with that? So one thing, and I think just kind of going really quickly, and Sandy, because you emailed me about this the other day, I think the bigger picture here is kind of to Mike's point around long-term investors. And as we're thinking about new trustees kind of coming on, as you all our board been here for a longer period of time, if you guys have ideas about how we can talk to new board members and kind of give them that perspective, right? Like in some ways, it kind of feels they're coming in at a time that's a lot more difficult to think of as becoming an investment committee, where certainly it's been kind of easy to be on an investment committee right now, right? Certainly over the past year, certainly since Mike said since like February, March of 2020. Where we've seen kind of incredible gains. We've seen our funded ratio rise to being overfunded. And so now is the time where if we're going to have the volatility discussion, thinking about from your perspective, what you would have liked to know first coming on the board, what are the ways that we can kind of convey that long-term view to your fellow board members who may not have to have the same responsibilities since they won't be executive committee, but we will be reporting to them. The comptroller's office and consultants will be reporting to them. And so understanding from their perspective what would help as we kind of try and think about what could potentially be certainly a different world than we've experienced over the past, call it almost 2 years.
I'm going to jump in for 1 sec.
Mm-hmm.
First of all, I think most of the borough reps are returning.
Okay.
On the board, so you're going to have a solid, group who've been there for many years on the board. But I think, at the first meeting, providing an overview of the mission and vision of BERS, along with a quick summary of performance of that then as now, so last year to this year, and it doesn't have to be 10 slides, but to just show general trends quickly would bring people up to speed. And that's why we created that vision statement and how we want to allocate, so that we would have something to pass along to the next group.
Absolutely. So thank you, Deb.
Yeah, I couldn't agree more with what Deb just said. I think a very standard training about, I think people are going to grasp very intuitively that a pension system should be long-term investors. So I think, you know, a pretty standard high-level fiduciary training just to kind of get people's feet wet. But they're going to understand that very quickly. I don't think anyone's going to come in and try to make dramatic, huge changes to the way that the investment process is running.
And so absolutely, and we have we're thinking about two trainings. The first, we're looking at the end of May, middle to end of May. Key, do I have that right? As far as like when we're thinking about, yeah. And then for all members, and kind of what we'd have to report, and essentially what the executive committee owes to the full board on a quarterly basis, and then July for a more kind of fulsome, similar to what we've done before, where we had the strategic offset. Perfect, thank you. So yeah, so the one thing last thing I want to show you, and this is, we can go very quickly on this, so we can get to the updates for you all. These are kind of trailing 3 and 5 year performance by asset class. One thing that's happened relatively recently, we've always looked at the private markets through just the lens of the PME when we are doing our discussions. Recently, our investment book of record platform, Kaisa, was acquired by Burgess. And with that acquisition, we were able to get access to all of the Burgess benchmarks. And so in addition to looking at the PME, we can also now look at the kind of a universe of private equity funds and their returns, and look at that universe versus our subset. And so I just did this real quickly, again, not spending too much time. We could go into more detail later, because we've talked a little bit about where we've outperformed and where we've underperformed, whether you've been to a common investment meeting prior or at one of the executive committee meetings, that in general, the performance across most of our asset classes have beaten the benchmark. There have been 3 assets where over a meaningful time period, 3 or 5 years, we haven't. EM equity, and we've made changes there. Working with Siegel and BAM on how to construct that portfolio. So we're waiting to see how those come out. We hired JP Morgan last year, we got them on board last year. And then alternative credit, high yield, and really the issue there was our bank loans portfolio, which we ended in 2020. And so we're still waiting for those to kind of bear out where you see most of the red in excess returns. And then in private equity, over the 5 years, we've beaten that Burgess benchmark. Over the 3 year period, we have it by about 79 basis points. Most of that is when we're looking in small and mid buyout or large buyout in the same way that large cap U.S. equity has been fantastic. So we've had the strongest returns there. I'm less concerned about that. That one's is in general, I think we're pretty steady on that program. But I wanted to show you this one to tell you that we now have access to new benchmarks. I think that was kind of the biggest kind of reveal there, that now we can look at it both from a PME, but then also from the perspective of looking at a universe of funds. And then also just to show, again, generally speaking, we've had good performance throughout the portfolio. But we have two areas that we're waiting to see how we're going to perform. So I just wanted to do that.
This is very cool, Antonio.
Yep. So yeah, so no, I'm excited about, like, I was geeking out on Kaisa for a couple days, just kind of working through all this.
I'm unsurprised. Do you want to? I'm guessing we're going to have access to these for quite a bit of time now going forward. Is it worth adding some of these Burgess benchmarks into the IPS?
Yes.
Formal process.
I would love to talk certainly with Axia about their feeling, because each of them have their pluses and minuses, right? Like Burgess, Cambridge, Preqin, PitchBook have all their pluses and minuses on how they gather the data. This is kind of Burgess is really kind of LP, and so they're getting information from from LPs that sign up. They're getting cash flows, and so that's what it's good for. PitchBook and Preqin use GP information, and so they do a lot of FOIA requests, and so I would love. Maybe we have a special session where we could talk to Axia and they can come in and kind of talk about how they see private market benchmarking, because certainly it's a lot more complex than and there's still a place in the PME as well. So I think we have multiple vantage points to look at it.
Yeah, it's definitely a much more unique lens than just looking at the PME.
Absolutely, thank you. All right. So that was just kind of for you all's information. I think that if there's no other questions or comments around performance, I wanted to give the committee 2 updates. on projects that staff is working on now. One which is of importance because this board and this body will be the governor should this search be successful. And so the next up is, and I would both have Kristen from my team and then also the folks from Siegel Marco discuss the variable TDA RFP update. So Kristen.
Yes, and hello, good afternoon, everyone. So we will be running a variable annuity RFP search. This search will be very important because it is going to allow us to retain or to gain control over the variable variable annuity program as it pertains to BERS. As you all know, or some of you may not know, this program is currently it is being overseen right now by TRS, and as it stands, we seek to retain control or to gain control of this program. It would just be better for our members, and we can also add more degrees of flexibility or institute more things that we would like to do with this program. I don't know if Siegel Marco wants to add anything at this moment, or if we go forward. Okay, we can go forward. So first and foremost, why are we running this RFP? All right. Well, first, we want to discuss the components that will be a part of this. One, a new investment manager platform, and also gaining custody of the BERS variable TDA assets. So the importance of the investment manager platform, of course, will be one, we get to integrate our the entire TDA with this investment manager platform and gain greater control over the roster of managers. And of course, given the availability of this fixed option, we believe that the priority is to provide market exposure at the best possible cost. So in alignment with having this investment manager, really being able to discuss the nuances of the TDA, which there are many, being a part of the city system and just kind of understanding all of that. This will be essential to be able to explain to an investment manager, a capable investment manager. All right. Lower fees is another benefit to running this RFP. We believe that we can lower the fees while maintaining performance for our members. And another thing that, as we're looking forward, is potential expansion. So currently, all the investments are linked to a single unit value. I believe that unit value is 151.454 as of December 31st. But as that unit value goes, so does the money and the of all of our of the body of all of our members. So we would like to see if we can potentially expand the options, maybe give varying profiles that will help those that may have some risk aversion or those that may view risk differently, do what is appropriate for them given their respective time horizons. Next slide, please. So who does the variable program include? All right. Well, we have tier 1 and tier 2 participants, and these more specifically, this balance of members, we're talking about roughly a little over $1 million, yet they hold a balance in the variable annuity savings fund and or variable increased take-home pay account. Another group that is included, and this is really the larger group, are all other members who have a BERS variable TDA account. So we're talking about the majority of us. System. Next slide, please. So this is the current state of the program. All right. As of 12/31/2021, we have 13,300 accounts. All right, 13,290 of them are variable TDA accounts, and only 10 are variable ASF and or variable ITHP accounts. So as you can see, the amount of those tier 1 and 2 members who have the ASF and ITHP accounts running in variable, pretty much, it's relatively negligible. All right. Overall, in assets, we're talking 500 and roughly on the order of $520 million in assets. All right, and about 3.4 million units. So quite a healthy amount, certainly necessary to manage going forward. And next slide, please. So these are the key dates, all right? So as you can see, we're closing in on the release date, RFP release date of March 1st. And then last date for questions from managers, March 25th. And the last date for us to get back to managers is April 8th, 2022. Then we have on April 29th, 2022, that will be the date that the proposal is due. So healthy timeline here, you know, really looking forward to getting all of these assets under one umbrella. I think it'll be key. I think it'll be a huge step for BERS. And I think that really expanding what's available and developing a solid ground for BERS in terms of this is going to be paramount. So thank you, and let's go forward.
And why I think it's thank you, Kristen, and why I think it's incredibly important to have Siegel talk is that we need help on this, right? And I think it's a big undertaking, and it's one that we've been contemplating for years, and it's one where the initial draft of this RFP was written in November of 2020. So to give you an idea about just how long we've been working on, and that was the draft. Like we actually had been working on it for months at a time. Keyshawn, Kristen, Alex, Sharon, thank everybody for all their work on it. We're almost there. And so this is certainly a tentative or aggressive timeline, but we need help in thinking about the scoring, kind of what they've seen. And so that's why we want to enlist Siegel Marco to assist us in kind of looking at the platforms and custodies. And so, I think it's incredibly important that we have our consultant helping us in this effort. And so, Mike, Vanessa, Christian, if you guys can talk a bit about your experiences doing this and so forth.
Sure. And maybe to start with that point, this is not specifically going to be an investment kind of RFP and process here. And let me fast forward, because as trustees, I should also tell you that important to know that if this works the way we hope and the way we expect, based on the vast experience that Siegel has with doing these kind of technical administrative proposals, this should be very transparent to participants. We will move from at least in the initial stage. When we get to the investment part, it will be different. But so Siegel has both the investment folks that and a administrative technical group that specifically looks at the providers. Essentially, this is a combination of custody and a platform to be able to make future investment changes. The RFP is very comprehensive. Gosh, I can't remember. As Antonio said, we've gone back and forth quite a while on the number of steps, but you can think about it looking at both the technical kind of structure of their platform, the kind of systems that these entities use, and then the kind of deliverables and the online access that staff will have. And within that frame, we expect that most of the providers will be from the bank and administrative, maybe some insurance company kind of entities that can do this kind of custodial platform that we want here. You won't be seeing typical money manager names, because there's not a clear need for, we just don't need them to run any of the money right now. We need them to do the administration. So as you see the timeline here, we've left ourselves a lot of time to be able to go back and ask questions about those administrative platform issues. From Siegel Marco's point of view, we'll be bringing in some systems and kind of programming expertise to look at the responses here, and so that we can come up with that scoring for each of these administrative platform and kind of long-term investment needs that are reflected in the RFP.
Absolutely. Thank you, Mike. And one of the things, and I don't think we can talk about it necessarily in public session today. And maybe it's a further executive committee item in executive session. We have a clear benchmark that we need to hit in order for it to be worth it to our participants, right? At the end of the day, I think Kristen laid out the rationale for why we want to run the RFP. And why we think that we can add value to our members by bringing it in-house. If we don't, for some reason, don't meet those or none of the proposals meet that benchmark, and again, happy to, it's not an item for public session on what that is, but happy to talk about in an executive session, kind of where we want to be. If it's above that number, then we stay. This is not about taking control for its own sake. This is about seeing if we can get a potentially better deal. And if we can, then we move over, and if we can't, we stay. So that's really our holistic goal. And I think working with Siegel and working with you all, I think we can get there for all of our members that are participants in the variable TDA program. Okay, any
Thank you,
questions?
Antonio. I have a couple quick questions I wanted to ask. I guess I want sort of, maybe this is a question actually for Alex, but from the perspective of the varying profiles, the varying risk portfolios, the single unit value, that's something that we have to change statutorily in order to offer
Yeah.
multiple options.
I mean, again, the short answer is yes. If you would like to move into attorney-client, we can discuss it in more detail.
Nope, just wanted to confirm. Thank you. And then I guess I wanted to
Sorry,
ask a
let
quick
me just clarify that. I'm sorry, Russ. The rules and regulations need to change. So actually, it's not as difficult as reaching for the statute, but there may be some statutory interconnection that's going to need to be explored.
So we're not quite sure, maybe?
I would have to explore that.
Okay. All right, that's interesting. I'll be curious to talk more about that as we get further down the path. I guess I also just wanted to confirm on the scope, the dollars. So the presentation said something about like 520,000, I believe.
Oh, million.
Million.
Sorry, 520 million. My apologies. I just, I don't sit on the TRS board anymore, but having reviewed the market value of the funds held by funding agents, at least in October, I know that there was a fairly significantly higher number of BERS TDA assets than this in the TRS Diversified Equity Fund, as well as a small portion of QPP. So I just wanted to make sure that we were capturing all of that, or I was curious if some of the BERS investment was still going to stay in the variable A at the conclusion of this RFP.
We will get back to you on that because we did have two numbers. And so I think, me and Kristen talked about that today, where it's the, if I'm mistaken, about 830.
Yeah. There's an 830 number floating out there, but based on our run through of the data breakdown, we got 520 here, so we'll have to reconcile that because that's quite a huge delta.
Yeah, I agree. All right, so let me know on that front. And then I guess the other question that I had was with regards to something that we have talked about very early on when I first became a trustee, maybe 3 years ago, the chancellor's plan, whether or not that was going to be folded into this RFP as well.
We had approached it, I think, after internal discussion with the executive team, with fiscal operations, they were uncomfortable with us rolling that in. And so given some uncertainties on accounting and the annual financial report. And so it would be we would have to separate it out. Honestly, I would say that I'll be honest, I was hopeful that we could fold it in just because I can imagine just any type of topping up of assets, right? So if we could go, if it's the 830 number, then we can roll up another $125 million, right? Getting close to $1 billion, maybe that gives us, it may not be enough to get us any type of break, but it certainly would help solve two problems that essentially do need several. But the one difference is that because we would need record keeping, right? And so that's when the RFP got complicated, right? Because we do our internal record keeping ourselves, any type of loan processing, that's all done internally with whoever would take over the chancellor's plan. It is a much bigger administrative lift for them. And so the RFP itself started getting unwieldy, where we were saying, all right, are you going to do both of them? Are you going to do one of them? Are you, we're asking for record keeping here. We're not asking for it here. And it just got so complicated that I think both from a just a clarity perspective, but then also from kind of the executive team and fiscal operations and legal wanting to make this kind of clear, I think that kind of fell by the wayside.
Okay, thanks for the explanation. I think it is a little bit of a missed opportunity, unfortunately, but I can understand.
Yeah,
I think what another angle I think another angle to this is that the nature of the services doesn't fully overlap.
Yeah.
We need a lot more management services, not just money management, but also customer service,
Mhm.
the
Website,
provision
yeah,
of a
yeah.
website, and so on and so forth for the chancellor's plan. In other words, the current scope of functions that's offered by Prudential goes significantly beyond what we need for the variable
Mm.
TDA.
Absolutely.
Oh, that makes sense. I appreciate the additional context, Alex. Thank you.
All right, so absolutely, so we'll keep you updated, and to the degree that we want to have kind of a session on this as this gets released. Again, these are tentative dates. We'll see if we hope to hit them. But otherwise, just this can give you kind of a general timeline, and we'll move from there. All right. Next up, we have kind of an update on the global listed infrastructure RFP. So, Cody.
Thank you, Antonio. So, so as we discussed before, we are kind of proceeding with the global listed infrastructure RFP, and it's currently been released. So I just wanted to give a timeline, kind of reviewing where we stand at the search and where we look to be in the coming months. So in January of this year, we posted it on our website, and as of the 19th, we have constructed our shortlist in conjunction. Our staff, along with Siegel Marco, have kind of constructed our shortlist, and we're currently waiting. February 4th is a bit of a tentative date. We're currently, as of this week, we are going to be setting out the shortlist. We're going to be setting out the shortlist pending kind of internal discussion. And with that, we intend to kind of conduct our internal measures of whittling down the short list into a finalist list from the state till March 31st, exclusively through Diligence Vault. As a reminder, this RFP is running entirely through our diligence platform, Diligence Vault. And after the 31st, we look to conduct manager due diligence meetings with the finalists. They're looking to be around 3 to 5 finalists, more likely 3, from April to May. And hopefully we look to kind of come with a finalist recommendation to the investment committee by the 31st of May, looking to be a very streamlined process, and in truth, much quicker than kind of the process would have been if we had gone through BAM entirely. So this is a landmark kind of search for us. So we look to kind of run it smoothly for the next three or so months.
To give just thank you, Cody. To give just a little more color as a reminder, this is kind of a completion portfolio for us as we look to both kind of consolidate our parking places. And one big update is that we ran this ex fossil fuels, and so ex midstream pipelines. And so that I think is really important as we're thinking about multiple angles where this is a kind of a concentrated search. It is part of the recommendations coming out of the asset liability study conducted by Siegel Marco. And so we're, kind of our contention is that this is a way for us to accomplish multiple goals in one search. And so, Cody and the Siegel folks and Kristen have been working incredibly hard and kind of really helpful with procurement, who has also been helpful in getting postings ready, addendums and for compliance purposes, things like that. So just wanted to make sure you guys have an update on what our goals are for the first half of this year.
I appreciate the comment about the consolidation of parking places. I was kind of wondering what our expected allocation was to whichever manager ultimately is selected through this RFP, and how that potentially interacts with our pacing plan for 2022, and whether or not we would incorporate that, whether or not you have the list from Petya yet that you've reviewed and done your due diligence on, not necessarily all of the due diligence, but You get what I'm saying? I know we've got
Yeah.
a pacing plan of 175 million for this year, and I'm wondering if this RFB is going to take the place of one of the targets from Petya, or if we're, the consolidation of parking places is actually how we're going to fund most of it.
So I would say that the latter. So look, I think Petra has made a fantastic pipeline, and I think there are, kind of a streamlined one. For the most part, she's been able to get to our minimums or kind of even exceeded them. So from that perspective, we think there is type of interaction. Now, from a separate account standpoint, we do have kind of a minimum that we want to maintain. But even if we pace at 175 this year, if we look at a pacing analysis, let's say generously 20% to 30% of the capital gets called over, after even closings. And even if we made the commitments, they don't end up doing final closes until later or maybe even early next year. So we think there's still plenty of room to have, and I think our range, we're looking at about 100 to 150 million dollars. But certainly, we flexible around there. But we're about half allocated in infrastructure, and so take 2% of 9 billion, so that's 180 million. I don't know we'd go that high, so probably I would say closer to 125 to 150. Mike, Vanessa, or Christian, any comments on that?
Well, just we talked at the outset of this call about an asset allocation that could actually raise our exposure here a little bit. So
true.
yeah, Russ, I see it mostly just to capture the fact that we're not, in our pacing play, we're not fully invested in the asset class, and we want to do that. We also like the other element it brings, especially other element of extra return it can bring to the total portfolio, though. So yeah, I would see 100 million as kind of the minimum that's going to be in this, between extra pacing, taken away from the placeholders, and then this expansion, because it fits a lot of our no fossil fuels kind of equity growth targets. And it's global.
Yeah, absolutely. Thank you for that answer. I appreciate it.
Any other questions? Right. Hearing none, this is the last item for public session. So we now going to ask for a vote to go into executive session to discuss investment managers and fund recommendations. Can I get a motion to enter executive session?
So moved, Russ.
Thank you, Russ. Can I get a second?
Second from John.
Thank you, John. Any discussion? All right. All those in favor, please say aye.
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 All right, perfect. Any opposed? Any abstentions? The motion carries. We are now in executive session.
Recording has been resumed. You may continue, Antonio.
All right. Thank you, Karen. Report out from executive session. In executive session, the board approved a commitment to a fixed income emerging manager of managers, made two commitments to private equity investments, and a commitment to a real estate investment. That is all the business for the executive committee. Can I get, if there any further discussion? All right. If not, can I get all right. If not, can I get a motion to adjourn?
So moved, Russ.
Thank you, Russ. The second, Donald.
Second.
Thank you. All right. Any further discussion? All right. All those in favor, please say aye.
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 Aye, Russ.
All right. Perfect. Any opposed? All right. Any abstentions? All right. We are adjourned. Thank you all. The next executive committee meeting is scheduled for Tuesday, March 8th at 1 p.m.